Welcome to Bitcoin Escape Plan. Bitcoin has been on a massive downtrend after recent local failures at 82.5K, but is this pullback just a minor setback before we continue onto new highs? Or are we seeing just the first steps of a dramatic drop in price? In today's video, we'll go over the key levels of support and resistance that indicate for us where the momentum is heading next. Later on in the video, we will go over the higher timeframes just so we understand the historical context of how the price typically behaves during this time of the cycle. And at the very end of the video, I will of course go over the perpetual trades just so we see how we can be accurately using leverage during a time where it is choppy and uncertain. If you are new to the channel, go ahead and check out bitcoinescapeplan.com. Just added the book to the website. You can go ahead and click on that, put in your email and read it for free. And of course, you can read all of the newsletters there on the homepage as well. bitcoinescapeplan.com. Every Monday I release an in-depth breakdown across all the time frames that matter most. BitcoinEscapePlan.com. All right, let's check out the chart. This is the 4-hour chart. This is where we always start. Before I mention that, there is a decent amount of compression on the 1-hour Bollinger Band at the moment. So we should see a dramatic break to the upside or the downside pretty soon. I would imagine very soon after I release this video. So just keep that in mind. At the moment, we've been seeing the 4-hour SMA continue to descend downward. And while we have had a break above it over on Wednesday, Thursday into a failure on Friday, we did retest it Saturday. Saturday, actually, there was more action than there typically is. Anyone who follows me on this channel knows I'm training parkour on Saturday. I'm relaxing. I'm living my life on Saturday. Typically, the Bitcoin chart is also pretty boring, but yesterday it actually did chop around some pretty important levels. So if we take a look at that, where were the local highs of these candles? These candles went to about 77.2. That's also confirmed on the 1-hour. That seems to be a pretty important level of potential resistance. I will go over later on in the video. The Fibonacci pivots that we are closest to right now is 76.6K. Looks like we're having a little bit of trouble reclaiming that after failing down below the 4-hour SMA. Rising above in this candle. We still got about 3 hours left in this candle, so haven't really seen tremendous volume enter. We had more volume on Saturday. So as I said, once that compression is more clear on the 1-hour time frame, it's either going to give us the liquidity we need to pump higher or continue to drop lower as I expect and as I am positioned for. So yeah, that's what we're looking for at the moment, is confirmation essentially of how the price feels about 76.6K and that 4-hour SMA, which is currently at 76.4K and still descending, which is important to note. We're still dropping on the 4-hour SMA. So even if the price is going to go higher, it would need to pull the SMA higher as well. So in the short term, this is very important. I go over this in every video. These are the anchored VWAPs. Not really that much to talk about right now. I'll go over here to courses if you don't know what those are and you want more details. Essentially, these are magnets. When we lost it the last time, that pushed us down, and we're essentially trying to test if we can get back to it. At the moment, we can't. Looks like 78K is forming as resistance, even when 76K initially, I talked about this on Wednesday's video, 76K had initially been forming as support. We, of course, saw resistance at 78K, and then that's when we broke down below the 76K support. It is important to note that's also where we broke down below 76.3K, which anyone who follows this channel already knows. That's a higher time frame Fibonacci pivot. That's super important. I talk about that every day of my life. It's very important. And we're currently essentially waiting for the price to confirm that level as support or resistance as well. Locally speaking, this is a long, so there is potential that we go higher. However, as I said, we're struggling a little bit on the 4-hour SMA, which would indicate we are probably going to head lower. But again, we'll probably know that in 2-3 hours. So depending on when you watch this video, we should already be through that expansion window. Very important. Before I go to the higher time frames, let's take a look at the daily. The daily, of course, saw a failure in the middle of May that has resulted spectacularly to the downside. Now, typically speaking, I don't really like the daily for trade setups, to be honest. It's more just for confirming trends. But technically speaking, that is a long, not a great one. It's like it looks like it can still very much continue to descend. So I wouldn't particularly be looking for that. But this is important to note. 73.8K is a previous all-time high in March of 2024. That's the ETF all-time high. So we talk about that level a lot. It's both important technically speaking and psychologically speaking. So we got this wick over on Saturday. We dropped as low as 74.2, which at the moment is regarding 73.8K as support. I don't know how sincere of support that is. It's very likely that we could drop lower, and the only evidence otherwise is really that these daily candles closed at about 75.4, so slightly higher than those local pivots on the lower time frames, which I believe is 75.3. So slightly higher on the daily close than that Fibonacci pivot. But structurally speaking, we're still looking at primarily more consolidation. And I would say with a bias towards the downside. I know that there are a lot of creators that are larger than me that still think we are going to new highs. They trade a lot of different things though. So I don't know if they're just like not, I feel like people who trade a bunch of stuff instead of just Bitcoin, like don't actually know the Bitcoin history as well. They don't really understand the chart as well. They're just going based on how charts behave in general. And I'm really of the opinion that Bitcoin behaves differently, and it behaves very predictably. And that's why I talk about it all the time. That's why I made a YouTube channel about it. That's why I wrote a book about it. I just feel like it would be better off for most people to learn this chart like the back of their hand. And that indicates to me that we're probably going lower. Is, unless we can reclaim 80 and get momentum past 83 and 86, what I've been saying since February is that I expected a rise to 83 to 86. We saw that at the beginning of May, and now I'm kind of just waiting to see confirmation of trend moving forward, whether we can expect a rise higher or whether this is just a continuation of the 4-year cycle that we always see, which to me at the moment, that is still the case. Like that very much. We only have a couple days left in May. Technically speaking, this is still bullish, not by very much. Any close above 76.3K is technically going to be regarded as a bullish month. However, historically speaking, we do not have a precedent for 3 green candles in a row during a bear market year. Very uncommon. We typically only have 3 to 4 total in a bear market year. So the fact that we're already on number 3 is, I wouldn't say alarming, but is a bit different than what we would typically anticipate. And that's why, for the most part, I do think we are going to see a further breakdown into the end of the month. This one is probably a good example of what we could expect, where even though we had a thin candle and then a big candle, and now we have another thin candle, I would expect that probably results to downside pressure in the month of June, with a lower high forming in July. So at the moment, nothing has changed that. The only thing that's really different from previous cycles is we hit the monthly SMA earlier than we typically do. That's really it. Other than that, structurally speaking, it looks almost identical. The floor seems to be a little bit higher than, I know a lot of people are talking about this. This is the high on the monthly closing candles for 2021 is like 59K on the nose and 61.9K, to call it 62K on the nose. And we broke below that, but at the moment, prices regarding that as support. Now, in previous cycles, we did see the more important corollary for the 2017 cycle was we got up to 20, and then we did break below 10, which was the important psychological barrier, but we still stayed well above the previous all-time high in that instance. And then in a very similar way here, we dropped down below the all-time high when we went to 15.4, but we stayed above the monthly closing candles, which was closer to 13.9K, call it 14K. So that is what some people are using as evidence that we've already bottomed, is we wouldn't really expect, we can expect a wick below that, but we're still seeing candle closes above those all-time highs in 2021. I'm not totally convinced of this. The best evidence of this is really these guys here. This is the ETF rise from about December of 2023 into March, April of 2024, before we had a period of consolidation. I do think that this kind of warped our expectation of how high the cycle could go in general. I think that's why we didn't see 130, 150, 180 is because we had already had two major psychological victories, one being a new all-time high earlier than ever in precedented history for a halving year, and then two being the key psychological level, which was 100K. I talk about key psychological levels more in the book, which again you can read for free just by putting your email in at bitcoinescapeplan.com. But functionally speaking, 100K is going to be the level that kind of governs how the price behaves, I think, until probably 2029, to be honest. Like, I think that that is going to be a pretty crucial one that we're going to give back and rise to and give up a couple times over the course of the next couple of years. So definitely one to pay close attention to. And it really just depends on what we are going to see next in terms of cycle behavior. Now, in terms of cycle behavior, typically when we have, oh dear God, I did it again. There we go, I fixed it. When we have an interaction above the weekly SMA during a bear market year, typically what we expect to see, historically speaking, is we have a few weeks above that, and then we fail it and we start to give it up. Now, before I go into those historical examples, what we're seeing at the moment, just to give you a brief recap, when we initially broke through both the 76.2K Fibonacci pivot as well as the weekly SMA for the first time, the price immediately reacted negatively. I believe this was on a Saturday or a Sunday as well, where we had risen the whole week and then started to fail dramatically towards the end of it. We went back down below the 76.3K Fibonacci pivot, but then had enough momentum to rise and cleanly close above both of them. The following week, we did break back below both of them, kind of making it unclear which one is support and which one is resistance. The price can't really make up its mind. It just knows that it wants higher and was not experiencing enough resistance to not do so. And then, of course, we saw weakness at 83K. This is confirmed across multiple time frames with that anchored VWAP downtrend from the 126 all-time high. Again, I talk about this all the time, just not focus on it as much lately because, again, once we move away from it, then the only thing we can really talk about is the next one, and the next one is considerably lower at 68.2K, which I don't think that we're going to see yet. Me personally, I think that it's more likely that we're going to continue to chop for a bit, and that we probably wouldn't see those lows again until, I would imagine, after July, to be honest. I do think that we are going to get a push lower into June, but it's more likely that we have an interaction with this uptrend line from the 59.9K bottom in February. And then, as I said, I think we're going to get a lower high in July. I'm just anticipating that that lower high is probably 76.3K. Like, if we are able to break down below it, and even if we are to break this trend line and go lower and then reclaim it, I would be expecting for the higher low in July to be a failure of 76.3K as resistance instead of initially forming it as support, failing at that anchored VWAP. And then again, now we have broken it. So this is very important from the last video. This was not the case. We have now broken below it. Now we don't have other examples on the chart where that ends favorably for us. So, or for Bitcoin rather. I mean, depending on what your goal is. If your goal is to accumulate more Bitcoin, then this is what you want to happen. So this instance in 2022, this was a rise into March that ended up ultimately failing at the 47.6K Fibonacci pivot before breaking down below the weekly SMA. And as you can see, it stays above it for 3 weeks and then it breaks below it. What does it do? It rises again, lower high in June, failure into July, one more attempt into August, still fails it, still continues lower. If we go over to 2018, 2019, very similar story, a little bit more identical to what we're experiencing now. With a rise into April, we peaked out on the first week of May and then started dropping down. The only difference being we have a little bit more consolidation. We haven't quite had this full move downward into May that we had in 2018, but same instance where we have our lower high form in July. This is more in line with what I'm expecting personally. It's also very close to the initial drop, not the full weight of the drop, but I'll go over this in a moment, more locally speaking. But basically the price just kind of rised back to, I mean, this may actually be the 50% mark because I think this whole drop was like 72%. Let's see. Yep, just under 70%. and this one is 58. So a little bit more extended than 50, but still slightly past the 50% retracement mark is where we would expect our lower high in July before a failure. But again, what do we notice about this? Same case where we're only above the weekly SMA for a period of like 2-3 weeks. So the fact that we're already on week number 5 is an anomaly and would be completely foreign to us if not for this guy over here. This is, of course, 2014, where we had our longest period of time above the weekly SMA during a bear market year. Now, what was important during this time? This was around the Mt. Gox collapse. So a lot of people were buying their Bitcoin on a Japanese exchange called Mt. Gox at the time that, of course, imploded, I believe, end of 2013, early 2014. So that is part of what started off that raucous bull or bear market rather. And then over here, the important local event that kind of like saved the price during that time period temporarily is the IRS was making its decision about how to classify Bitcoin, and they ultimately decided to classify it as property, which of course, super bullish news. Why did the price behave negatively? Because that's what it does during bear market years, my friends. So our best case scenario is this, where we had a period of about 12 weeks where we were consolidating above the weekly SMA, where it still ended up dropping below it. Even in this instance, this is the only instance that you can find on the chart where we have an extended period of time above the weekly SMA during a bear market year, and it still failed to the downside. So for me personally, there is no reason for me to assume, and it is very confusing for me when I see this echoed on larger channels. I don't understand how we would expect this event to resolve to the upside. Like, that does not make sense to me. It's very confusing to me when I see that on other channels that I respect, because we don't have a historical precedent for that. Now, again, we didn't have a historical precedent for this high in 2024 as well, but we could explain it. This is the ETF buyers. We can explain it. This is, at the end of the day, this is a supply and demand asset. It goes up and it goes down based on how much money people put into it. So there are instances where we can see changes. However, me personally, given the weight of the narratives that are present, I know they're trying to decide about the Iran war right now. That could be bullish for the stock market. That does not inherently mean that it's bullish for Bitcoin. I saw an interview with Mark Cuban the other day where Mark Cuban said he had sold all his Bitcoin because it's not behaving as a hedge against inflation, which, like, to me is nuts. It's not supposed to be a hedge against inflation monthly. It's supposed to be a hedge against inflation per decades, you know? So it's just a little bit short-sighted on his part. And he also said that he's still holding Ethereum, which is fucking crazy to me, that you would like choose to hold Ethereum and not Bitcoin, unless he's staking all of it. If he's staking all of it, I guess that I get it, but I think a lot of people fundamentally don't understand that not all investments are created equally, and the government is only stockpiling one of these, and it's Bitcoin. So that's the one we should be focused on. The only other things I would pay attention to for the narratives of this, again, if we think about locally speaking to July or June of 2014, what was the similar narrative? We had the IRS making decisions about the legal classification of Bitcoin. What is it that we have now? We have the Senate deciding about the crypto market structure bill, the Clarity Act. We're getting confirmation of that by July. At the moment, there's no FDIC insurance for the stablecoins. That's not good for you or me. It's good for the banks, I guess. And there's also no yield on stablecoins, which is not good for crypto companies, not good for crypto clients. It's good for who? The banks. So the banks are very much in control. And with that thesis in mind, it's hard for me personally to believe that JP Morgan Chase, when they fully launch their stablecoins, which I believe is in Q4 of this year at the earliest, and more likely January of next year, you haven't got any pamphlets in the mail, right? You haven't got any little flyers telling you that you're going to get 10,000 extra points if you use stablecoins, right? Until that happens, it is hard for me to believe that sincere liquidity is going to return to the Bitcoin market. I don't care if it's still present in the stock and real estate market. I don't analyze those. I analyze the Bitcoin market, and the Bitcoin market is not going to have that liquidity return until it functionally materializes. It will functionally materialize sometime over the summer, I believe, when the Fed starts to have more stress with the bond market. and they will be forced to print. When they are forced to print, a decent amount of the liquidity, that liquidity will be sucked up by Bitcoin, because that's what it is designed to do. So me personally, if I'm thinking about Q4 of this year, when Chase is going to launch their stablecoins and everything else, does JP Morgan Chase make more money from their clients off of Bitcoin if they buy it at 100K or if they buy it at 50K? Which one? Because to me personally, it's 50K. They can't get people to buy irrationally at 100K, because maybe it goes back down, maybe it doesn't go back down. They said over here that it was never going to go below 100K on the news, but then it did go below 100K. Is it going to stay above it now, or is it not? There's too much uncertainty around that level for people to FOMO in at that level. Whereas if Bitcoin is at 50K or lower and you just got a big old stablecoin bonus, you're going to be more likely to shift more of that into Bitcoin. And JP Morgan Chase wants you to hold your Bitcoin with them forever so they can continue to do whatever the fuck they want with it. They had a $920 million fine for manipulating the gold market and the treasury market between 2008 and 2016. That is a rounding error for them. They do not care. They're going to continue to do the same thing. Bitcoin is no different. I'm sorry if you're someone who's like looking for a happy-go-lucky Care Bear fucking explanation where Bitcoin saves the world. That's not reality. Bitcoin fits into the existing financial structure. You either get with that and understand how to read it, or you continue to get rinsed. That's pretty much it. So me personally, that's what I'm paying attention to, is 76.3K. There's no reason for me to believe that we are randomly going to start going higher based on, again, our only other instances where we have interactions with the weekly SMA during a bear market year. It always resolves to the downside. Even in an instance where we consolidated for 12 weeks, we did not have a reaction until that 12th week. So the fact that we are on week number 5 and we've already had a reaction means that we are overwhelmingly more likely to experience downside than upside. The only difference being if we can see strength again at that 83K middle band of the downtrend anchored VWAP. And again, locally speaking, the important level is 86. If we take a look at the anchored volume profile over here, this is the bulk of individuals who own Bitcoin, primarily people in 2025. So this is a lot of people who have lower conviction, who don't understand how to analyze the price themselves, and who just bought because it was the fad and they thought that they had to. Those people are waiting to see if they should hold on to it, or if they should be buying more Nvidia stock, or if they should be buying more real estate. They're not as focused on their Bitcoin stack at the moment. Their Bitcoin stack has been a big old goose egg for them. So these people, very important to pay attention to whether this thins out as we continue to go higher. Or again, if we continue to go lower, does that stay where it is, or do people start thinning out? Now, the higher majority actually is slightly lower here. These are the ETF buyers primarily, as well as the people who bought in this range now. And those people, I think, are going to be less likely to panic and sell. They're probably going to be more likely to add throughout this part of the range, and then as well if we break down lower. So that's kind of what we're waiting for, is we're waiting for confirmation of whether or not we can get to 86. And then me personally, we're not in a bull market until we're above 96, and we don't have a historical precedent for breaking the weekly SMA top Bollinger Band until we're on the other side of a full compression of the Bollinger Bands and a bottom signal. So we don't have a clear enough bottom signal yet. We do not have compression of the Bollinger Bands yet, and we do not have historical precedent for breaking the top band, which means the top band is at 91.9K. That means we have no historical precedent for even getting to 91.1K, which, as I said, the bull market starts at 96K. The bull market starts at 96. So if we can't functionally even get to 96, explain to me how we get to a bull market, because I don't understand it personally. It does not make sense to me. I do not think that Bitcoin is going to be the big story over the summer. I think the stock market and the real estate market are going to be the big story over the summer. The MMA fight on the White House lawn, like, that is the clearest give them bread in a circus and they will never revolt moment that I've ever witnessed with my own eyes. It seems like it's satire and it's real life, This is Roman Colosseum type shit before the fall of the empire. I really think that is just going to be another lower high that still results to the downside, because it makes the powerful players in the market more money if the price goes lower. They can buy more of it. Why would JP Morgan Chase and the US government want the price to rise above 100K before they put in hundreds of billions of dollars into it? Why would they want that? They would get less of it. They would have less control over the supply. That's not what they want. What they want is for people to be scared, for people to be irrational, for them to place bets on fucking Kalshi and Polymarket instead of actually investing in the asset. And then they want to spook those people and wipe them out while the price continues to go lower. That's my opinion. Now, I could be wrong. Maybe JP Morgan Chase is your best friend. Maybe the US government is your best friend. Maybe they want Bitcoin to continue going higher so you can be rich forever and it's all sunshine and fucking rainbows. But I don't personally think so. I think it's much more likely we're gonna show weakness confirmed at 83. You know, this is something that we probably are going to wait till the end of May. It is pretty important to note, again, at the moment, this is technically bullish on the monthly time frame. Not bullish by a lot, and I would regard that as a significant failure. Not quite enough momentum for us to get another retest of 83, especially since we've had prolonged upside for this period of time. And again, we don't have any historical precedent for 3 green candles in a row in a bear market year, period. So already full stop there. This is not normal. Again, we only have 3 to 4 green candles in general in a bear market year, typically speaking. So we're already kind of at the end of what we would expect for upside momentum. And I think that the only other one that we're going to get is probably July, or maybe technically speaking, since we started so early, we could get some upside momentum probably in December, November, December. I would assume the bottom will be in by that point. A lot of people who are older in the space believe that we're going to see the bottom around October, kind of myself included. I don't really need it to be exact. I'm just kind of going to be paying attention to key levels, which is primarily, you know, I talk about these all the time. 73.8K is the important psychological one, as well as the March 2024 all-time high. And then the middle of this range that we've spent so much time in is about 70.3K. And to me, 70.3K is, if we are above that, then we're more likely to retest 76.3K. If we are below that, then we're more likely to test 64K. The more times that we show weakness at the higher part of the range, the more likely we are to test the bottom of the range, and then we're going to need to test the strength of the bottom of that range, which means that we will probably break it. And the longer we spend below it, the more likely we are to test the lower one. Again, unless we just sit in consolidation for the rest of the year, which is not what we typically see for bear markets. So let's get into the perpetual trades real quick. So I'm still in my short. I entered this short at a terrible time. Do as I say, not as I do. I entered over here. This is a terrible entry. This is a long entry, not a short entry. I did that primarily because, as I said, I talk about 76.3K all the time. And I think based on the higher time frame, it's really hard for me to believe that we are about to push higher. It's not impossible, but there's an overwhelming amount of evidence for me on the higher time frames that we are not going to just magically start rising above this. It's not impossible for us to continue to consolidate here, but I'm still biased towards the longer we spend in consolidation, the more likely that we are to start to break to the downside. Let me go double check the 1 hour. Still got compression, still showing a little bit of weakness on that 76.7K Fibonacci pivot, very similar to the 76.6K one that I mentioned. Which looks like also kind of where the top of these candles are closing. Have not retested the 1 hour SMA. Oh, that's the 76.7. Got it. This is 76.6. Okay. So this is pretty much the same on the 4 hour time frame as well. This is looking like we're starting to see a bit of expansion. Unclear though if we're going to get a snap to the upside that breaks down lower, or if we're just going to continue to fail. Hard for me to believe though, again, based on these guys showing some structural weakness around 77.2K. And if we just look at that within the context of the overall shape of the chart right now, those guys are slightly below the peaks on the way up, but as you can see, also slightly below the lows of that range. Obviously, we did break well above that for a while, but Yeah, that would be the important one here, I believe. So around, yeah, 77.3. If we continue to show weakness around there, I think it's just going to put more pressure at us at 76K. And again, any failure at 76.3K on the higher time frames is going to push the price down lower. This is actually what happened at the end of last week. Where was it? Yeah, it was like right into Sunday. It was where we started to show weakness at 78, and that's what actually pushed us down into the rest of the week. So, me personally, I kind of have been going back and forth between how I want to utilize. God damn it, I did it again. The futures contracts layered with the perpetuals contracts. I'm still inclined to think I want to just have trend exposure with my perpetual contracts rather than continuously hunting for scalps. I think that the futures contracts are a little bit better for scalps. Or again, if you're trading on BitUnix or Femex or whatever, any of the other places where you can trade isolated leverage positions, then obviously you can trade both longs and shorts on it. But I'm still doing the Nano BTC perpetuals contracts on Coinbase. Still liking them a lot. And yeah, again, functionally speaking, what we've seen most recently is longs. So again, anybody who's been following the channel for a while or you're familiar with the strategy that we're looking for entries is 2 candles outside of the Bollinger Bands, either to the top or the downside, that are kissing like that. Those are our clearest indication of about a 70 to 90% probability that we're going to go 1% in the opposite direction. Now, sometimes that continues, sometimes it does not, but that's the probability. Is when we see a candle like that, 2 that are kissing right next to each other outside of the Bollinger Bands, that's typically what happens. Is it'll go at least 1% and then it'll either continue or it will retrace back to the level that it's at. And that's really all that we need. We do not need to be hunting for random rises on Zcash and other things that are difficult to predict, because Bitcoin is not difficult to predict. And if you can trade it at 10x leverage, why the hell are you trading other things? That does not make sense to me. That's why I made a channel around it. So that's what we're looking for at the moment. Technically speaking, this is our last good short entry. This is actually where I panicked. I actually bought a long for the futures contracts there. I think I lost like $7 before I closed it. I ended up going against it. So if I had done this properly, this actually would have been an instance where I should have added to my short trade, and I would have dramatically reduced my cost basis and position, where I would now be in profit. And I think that that is an important thing to note with the perpetuals contract, is technically speaking, now, you got to be very careful with this. You got to pair this with actually knowing what you're doing. But technically speaking, you could continue to add to a long bias every time you have an instance to it, and then just wait for periods of time where there's weakness on the other end of the chart. And then you can, basically layer in as it's going low, sell out as it's going higher. And then same thing, you can layer shorts lower anytime you get confirmation of that, and just continue to load onto the position instead of having to chop in and out. And it really just depends on your conviction. And again, that's why I like the perpetuals trades, is it allows you to have long-term trend exposure instead of the dated future contracts. Obviously, you got till the end of the month, and then you got to close them, and you got to reopen a new position. So me personally, still biased to the downside. I understand that there is a lot of pushback against that. A lot of people who are seeing the downside is like not the contrarian trade. Like the contrarian trade is upside. I think more people are expecting downside than upside, other than, again, a couple larger channels where I'm like, really, it doesn't make sense to me why they're talking about 95 and 100K plus Bitcoin. Like, where are you seeing that on the charts? Like, I don't understand it personally, but that's what I'm looking for personally, is confirmation of weakness at 76.3K. I'm prepared to lose a little bit of money on this trade if I have to. I think I would probably have to concede that I'm wrong if we see another rise to 78K that results strongly. The 4-hour SMA is not really telling me that right now, though, dude. Like it looks like it hit its local highs and it wants to continue to trend lower. And again, it may shift. It may start to flatten. It may even start to curve up, in which case I'll have to reanalyze at that time. But yeah, I'm not seeing it personally. I'm not seeing the rise higher. I'm seeing more likely that we get a breakdown lower, What's the 15-minute telling us? 15-minute, we just broke above the SMA. Same thing, we're starting to see some compression. So I would expect at some point very soon after I release this video, I would expect we're going to get a break to one side or the other. It really is just going to come down to where do we want that weekly close? Do we want that weekly close at 5 p.m. PST today in 6 hours to be slightly above this Fibonacci pivot? Again, this would be similar to this guy where we initially had a break and then we showed strength. However, that does not look as strong as that guy did. So I'm not sure that we have enough evidence that we're going to have a bullish reversal here. I think it's more likely that we're going to want to retest 76.3K first thing later today, once we have the weekly and daily close. And then, yeah, I would expect we have another interaction with the weekly SMA that does not end favorably. Pretty much same story for daily SMA as well. It's starting to curve downward, so it's possible that we could have another interaction with it soon, but we'll have an interaction with it once it has formed below that 79.1K Fibonacci pivot, which at this point we haven't even seen since the middle of May. Been just dropping steadily. So we kind of have to take that into context that we're starting to see some weakness on the higher time frames. Don't fight the trend, my friends. All right, new newsletter up tomorrow at the website. You can go read that book. Let me know any comments, concerns, and I will see you in tomorrow's video. Have a great day, everybody.